All right, welcome back. You're tuning into Market Fatafat, where we're getting you all the stocks that are buzzing in trade. And now on the technical front, let's get on board Ruchit Jain, who's the Vice President, Equity Technical Research, Wealth Management, Motilal Oswal Financial Services. Hi Ruchit, thank you so much for joining us. And of course, from our research team, we have Kanishka and Rabinder. Coming to you first then, Ruchit, you picked up the SBI for us on the charts. Now, of course, the entire PSU basket is doing very well. After the entire monetization. After the finance ministry announced to monetize their investment in subsidiaries and joint ventures through a stock market listing of the PSU banks are buzzing. But for SBI, on the charts, what do you see? Because this counter has not done that well in the last 6 months as the other PSU banking names. So from here on, how do you see the stock moving?
Yes, hi, very good afternoon to everyone. Well, definitely, the PSU bank is one of the space which is still seems undervalued. If you look at the momentum also, then it had gone through a long consolidation phase in spite of the broader positive momentum that we have seen in the markets and even in the banking and the NBFC space. Now, SBI has been consolidating within a range since the month of April itself. The prices are hovering in the range of 740 to 800, 820 on the higher side. And it seems that the stock is now on the verge of a breakout of this consolidation. As in last 3 trading sessions, we have witnessed very good volumes in the stock along with the price up move. So we anticipate that the stock should do well and see a catch-up move to the recent underperformance. And technically, once the stock moves above 820, if it gives a closing above 820, 825 zone, then it has potential to rally towards 860 in the short term.
All right, keeping with the banks then, let's move on to the next banking counter that is in focus today, and that is RBL Bank. Now, this is on the back of a note by Citi, where the brokerage is maintaining a buy call with the target price that has been raised to 285 rupees from an earlier 230 rupees. Now, they're expecting the ROA trajectory improvement to 45 to 50 bips, driven by much awaited normalization of credit cost. They feel that the stress in the JGL credit card is expected to further subside in the June quarter. The slippages are likely to moderate to 4.5% versus 4.7% in the March quarter. Now, accelerated provisioning on JLG in quarter 4 and adequate provisioning in the cards portfolio is likely to normalize credit cost to 2.2%. Repricing of floating rate portfolio mix change in favor of secured segments will lead to a 28 to 30 bips net interest margin pressure. NIMs would bottom out sooner in the June quarter versus its peer. They expect the industry average loan growth of 9% year-on-year basis and 2% on a sequential basis, and deposit growth of 10% on a year-on-year basis and 1% on a sequential basis. And on the back of that, RBL Bank is in focus today.
Okay, so almost a 4% uptick coming in on RBL Bank in today's trading session. Let's move away from that and talk about a stock from the real estate space, and that's Mahindra Life Spaces. 2 reasons why the stock is in focus today and is up about 2% as we speak. The first one is that the company has acquired around 9 acres land parcel in Bengaluru for nearly 200 crore to develop a housing project. The company has acquired Shreyas Stones Private Limited, which owns 8.79 acres land in Bengaluru. The company will acquire 10,000 equity shares of the company, having face value 10 rupees each for 199 crores in all. The second reason is that earlier on Friday, the company had been appointed as the preferred developer for the redevelopment of a premium housing society in Mulund West. The project will be developed across a 3.08-acre land parcel with an estimated development value of 12.5 billion rupees, which translates to about 1,250 crore rupees. So 2 positive news flows coming in back-to-back for Mahindra Life Spaces, and today on the back of this acquisition for a land parcel in Bangalore, the stock is up 2% as we speak.
Alright, that's Mahindra Life Spaces. But coming to you, Rabinder, Titagarh Rail, that's the counter that you've picked out for us. Tell us what's the news for Titagarh?
Well, as Titagarh Rail is in focus, where Titagarh Rail and its associate firm Titagarh Firma SPA has received a letter of approval from the Maharashtra Metro Rail Corporation, and the order value is at rupees 431 crore is for the supply of 12 additional train set as a quantity variation, which involves the design, manufacture, supply, testing and commissioning of the passenger rolling stock and training of the personnel for the Pune Metro Rail project, and the execution is scheduled to be completed within 30 months. So back of this, Titagarh Rail is in focus, and the stock was up by 2% in the early trading session, but now it has erased its gain, but still the stock is up 0.5%.
Real 0.5% uptick almost coming in on the stock. Ruchit, coming to you, SRF is the stock that you've picked out for us. Last 6 months itself, the stock is up more than 40%. Very solid moves coming in. Last 6 months, 1 month, the stock has been inching higher. Do you believe that this could continue on the charts going ahead?
Yes, probably, we can see a consistent up move in the stock that it has been forming a high top, high bottom structure technically. And the good thing is that when the prices are going up from the lows, we can see a good volume-based buying opening over there. But the in-between corrections which are there is no volume-based selling happening when the stock corrects. So stock trading at 52 high itself is an indication of an uptrend in the stock. So we believe that this is likely to continue going ahead. As per the retracements, the stock could head higher towards 3400 to 3500 zone very soon.
Alright, that's SRF on the charts. Coming to you, Kanishka, Coal India is what you picked out for us. Tell us what's the news here.
That's right. Coal India is in focus because Mahanadi Coalfield, which is a subsidiary of Coal India, is going to start operations in 2 of its new mines, having a total coal reserve of 55 million tons in the Talcher coalfield area of Odisha's Angul district. Now, the firm has said that it is going to start operations of the Subhadra coal mine, having a reserve of about 25 MT in Talcher area by the end of financial year 2025-26. Now, similarly, the Balabhadra coal mine with a capacity of 10 MT will be made operational by the year end 2029 to 30 as per the company exchange filing. Now, despite this news flow, the stock is down about 0.7% in trade today.
Okay, so that's the reason why both of these, why Coal India is in focus, pardon me. Let's move on from that. And Ruchit, Laurus Labs is a stock that you've picked out for us. This is a stock that we haven't spoken about in quite some time because Pharma Core has been the flavor so far. But Laurus Labs, give us a sense of what you are making on the chart for Laurus Labs, because last 6 months, the stock is up about 20 odd percent. Last 1 year, it's been a very good run up for this stock, more than 65% gain coming in the last 1 year. Do you believe that this could continue going ahead, and if so, what are the levels you're spotting?
Yes, it seems to be a continuation of the uptrend. The 20-day exponential moving average has acted as a support in the recent dip, and we can again see a good volume-based buying happening in the stock at 52-week high levels itself. So now we are of the opinion that this uptrend is likely to continue, and this could be one of the stock which could continue its relative outperformance within the sector. So 680, 690 now becomes a very crucial support for the short term. Until that is intact, any existing long positions should continue to ride the 10, and any minor dips if comes in the stock, that should be used as a buying opportunity for potential targets around 750 to 755.
Okay, so that's the take on Laurus Labs. Let's move away from that and talk about Granules. So while we are talking about the entire diagnostic space, let's just focus and talk about pharma now. Granules India has announced that its wholly owned foreign subsidiary located in Chantilly in Virginia in the United States has received one observation in Form 483 from the US FDA. In a regulatory filing, the company stated that the US FDA had conducted a pre-approval inspection at the facility from the 23rd of this month to 27th, and at the conclusion of the inspection, the US FDA issued one Form 483 with one observation. Granules Pharma has addressed and resolved the observation during the inspection is what the company has said, but nonetheless a 0.5% cut is what we're seeing when it comes to Granules India in today's trade.
Alright, that's Granule India trading with cuts of 0.5%. Ravinder, you picked out Piramal Enterprises for us. Tell us what is powering the stock in trade today.
Well, as Piramal Enterprise is in focus, the company has informed that their company has invested a 700 crore in Piramal Finance Limited, which is a wholly owned subsidiary of the company, by way of subscription of the right issue. And Piramal Finance will be utilizing this investment towards business general corporate purpose. And the revenue of the operation for the Piramal Finance for FY23, 24 and 25 was 6,59,178, and for FY25 the revenue from operation was 8,17,000 respectively. So back of this, Piramal Pharma is in focus.
Okay, so Piramal Pharma and focus on the back of that. But Ruchit, coming to you, defense stocks have been in focus ever since the opening bell today, and BDL, Bharat Dynamics, is what you've picked out for us. Give us a sense of what you're spotting on the charts for this one.
Overall, we have seen last 2 or 3 months several defense names such as BEL, HAL, BDL. They have given very good returns, and it seems that this last 2 or 3 weeks cool off which is there, this just seems to be a time-wise correction within an uptrend. So I think in this time-wise correction, any positional trader who is looking for buying opportunities, this recent dip is a good level to go long on the stock. But as I said, it's not for very short-term trading, but who can hold the stock in the portfolio for next 4 to 6 months. I think the risk-reward ratio is very much favorable over here to go long at current levels. Downside support is around 1800 level, and upside potential for the stocks comes right towards 2300 kind of range.
All right, moving on from Bharat Dynamics to IRCTC. Kanishka, tell us what's the news flow for IRCTC?
Right, IRCTC is in focus because the major ticketing system overall is on the anvil now. The Indian Railways shall soon roll out a series of changes to the passenger reservation system, that is PRS, which is aimed at enhancing passenger experience and operational efficiency. Reservation charts will soon be prepared 8 hours before the train departure instead of the usual 4. For morning trains departing before 2 p.m., the charts will be finalized by 9 p.m. the previous day, a move that gives the waitlisted passengers more clarity and time to plan alternatives. The Railways is also set to upgrade the PRS by the end of 2025 with new system capable of handling over 1.5 lakh bookings per minute, which is a 5-fold jump from the current capacity. Enquiry load handling will also increase tenfold. Now, other features that are in the pipeline include a multilingual user interface, seat selection, and enhanced support for Divyangjan students and patients. Additionally, OTP-based authentication for Tatkal bookings will be made mandatory from July 2025. Railway Minister Ashwini Vaishnav is also instructed to roll out this change in phases to ensure a smooth transition and avoid disruptions. Now, following this development, though it's a positive development, the stock is down about 0.5% in trade today.
To take on IRCTC, but Ruchit, it seems like you've picked out only high flyers for us because AB Capital is another stock that you've picked out for us. Last 6 months itself, more than 50% return is what we've already seen on this stock. How sustainable is this, and what are the levels that you're spotting?
So that's how the markets are rewarding. Those stocks are showing outperformance or have shown a good momentum over last 2, 3 or 6 months. I think they are witnessing a continuation of uptrend even at current levels. So AB Capital is one stock which, if you look at the positional charts and after listing, this is, I think, the first monthly close which we would get today, post the listing highs, and that put the chart very positive on a monthly structure. So I think at current levels also, if one is looking from a positional perspective, one can go long over here. Keep some room to add if you get any dip towards 265, 260 zone. And positionally, I think since this is a breakout on the monthly chart, this could do quite well over next 3 to 4 months.
All right, so still more steam left as far as AB Capital is concerned, but let's move on to the next counter that is in focus, and that's Godrej Properties. Godrej Properties has entered Panipat in Haryana as it acquired 43 acres of land for a plotted development that will have a revenue potential of in excess of 1,250 crore rupees. Now, the company is said that in a statement that its Panipat project will be the 4th residential plotted township in north of India. The land parcel, measuring approximately 43 acres, is located in Sector 14 Panipat. This project will contain approximately 1.02 million square feet of plotted residential development, offering different plot sizes along with other lifestyle amenities. The site is strategically located with access from Delhi-Chandigarh National Highway. On the back of this, Godrej Properties in focus today has declined from the day's highs, is trading right now with cuts of 0.4%.
Okay, so almost 0.5% cut on Godrej Properties. But while we're talking about real estate, let's throw the spotlight on Sobha as well, because this real estate company has forayed into the Greater Noida market and has announced the launch of a luxury residential project. Sobha Order, a premium development by Sobha Limited, will feature 2 towers soaring over 45 floors and offering 420 luxury residences. The project includes a mix of 1 BHK to 4 BHK homes, and the premium residences will come up across 2 towers in Sector 36 of Greater Noida, is what the company has said. They acquired the land for this project through an auction for approximately 160 crore rupees. While the company has not disclosed the total project cost, reports indicate that the investment for the development is expected to be around 800 crore rupees. So, fresh new foray coming in for Sobha Realty. They have forayed into the Greater Noida market, marking their first splash in the northern part of the country. On the back of that, the stock is up almost 1% as we speak.
All right, moving on to another real estate counter, that's Prestige Estate. Ravinder, tell us, what's the news from Prestige?
Well as Prestige Estate is in focus, where Prestige Group and Aryan Group, a reputed Chennai-based real estate company, has entered into agreement to jointly acquire a prime 3.4-acre land parcel in Chennai from Rane Madras Limited, and the acquisition will be undertaken through joint venture entity Canopy Living LLP, and the land is earmarked for the development of premium residential dwellings with the total development potential of approximately 7.5 lakh square feet and an estimated gross development value of rupees 1600 crore. Though the stock has recovered 1.5% of day's low, but the stock is still trading at red.
Okay, so that's the take on Prestige Estates, and well, that's three real estate companies that we've spoken already on this show, and that sector is slightly lagging in today's trading session. But with that, it's a wrap on the stocks that we wanted to cover on this edition of Market Fatafat. So Ruchit, Rabinder as well as Kanishka, thank you so much for joining us. But while we are talking about all the stocks that are in focus in today's trading session, let's throw the spotlight and talk about IndusInd Bank. This stock is in focus because the bank has submitted the list of candidates for CEO position to the RBI. Sources tell ET now that the bank's management has sent 3 names to the central bank, and Ankur is here with more details on the same. Ankur, good afternoon. Over to you.
Yes, sources say that IndusInd Bank likely to have submitted 3 shortlisted candidates for being MD and CEO. Among the choices which has been given, the topmost choice have been given for Rajiv Anand, who is Deputy MD at Axis Bank. His term is going to end in August 2025. Apart from that, we also understand that Rahul Shyam Shukla, who is there at HDFC Bank, his name has also been shortlisted and given to Reserve Bank of India. And we also understand that Bajaj Finance MD and CEO Anup Kumar Saha, who is currently MD and CEO, has also been submitted to Reserve Bank of India as being choice for MD and CEO of IndusInd Bank. This deadline was at June 30, which was given by the regulator, and for now we understand that 3 names given to Reserve Bank of India will be scrutinized by the regulator, and after that a final choice may emerge after the approval of regulator. We have seen that in IndusInd Bank in April this year, there has been several exits among MD and CEO and CFO after a probe revealed that there was an accounting loss, the derivatives accounting loss which was incurred and revealed on 10th of March, and series of resignation followed thereafter. Reserve Bank of India has approved a committee which is looking after day-to-day operations of the bank currently, but all eyes will be there who is the candidate which gets approval from Reserve Bank of India for being next MD and CEO of IndusInd Bank.
All right, moving on then, it is that time of the month again when auto dispatch data will start trickling in, and once again it is expected to be a mixed bag as two-wheeler sales remain healthy on the back of rural recovery and wedding season demand. But the passenger vehicles could remain muted amid lower inquiries and delays in conversion. My colleague Shrishti Sharma is joining in with the preview.
When it comes to the June auto sales data for the wholesales number, we are expecting it to be a mixed bag. Let's also tell you what are the big trends that we are catching. On your screen is the two-wheeler space that could do once again really well because the rural and the wedding season demand are expected to give a boost to the two-wheeler counters, and so could be the case for tractor segment as well, wherein a single-digit volume growth is expected on the back of a favorable base. Which segments are not expected to do well? Yet again, it's passenger vehicle and commercial vehicle, because for passenger vehicle there has been lower inquiries and delay in the conversion as well, and along with that, within the commercial vehicle segment, the industry volume is seen to be quite subdued for the month gone by. Now let's talk about the numbers then. Firstly, from the passenger vehicle segment, like we have been flagging off, the industry trend are not shaping up that well, and add to the fact is the increased discounts as well, because the OEMs are pushing discounts rather to help in the sales data, and across the companies, be it from Tata Motors, Maruti Suzuki, even M&M this time around, we are expecting a sequential decline, rather a month-on-month decline onto the sales data. The biggest of all could be for M&M with a 7% cut this time as well. Now when it comes to the commercial vehicle segment, yet again no great expectations out here. This time Tata Motors commercial vehicle segment can actually do better with a 12% growth on a month-on-month basis. Positive number expected from Eicher Motors VECV as well. While for Ashok Leyland we are expecting a 4% decline. The numbers could be close to 15,000 of units. So let's watch out for that. But the most critical will be the two-wheeler counters to watch out for. Whether or not they come out with any commentary on the rare earth issue is something that we will be watching out for, because last time Bajaj Auto and TVS Motors did come out with a commentary on that, and add to that was Hero MotoCorp. But this time TVS Motors and Eicher Motors will be the key outperformer, is what the dealers are indicating. This time we are expecting a growth of 15% and 23% respectively for Eicher Motors as well as TVS on a YOY basis and month-on-month basis. Nothing bad is what we are expecting. Key to watch will be Hero MotoCorp as well, wherein 5.5 lakhs of unit is expected this time, while for Bajaj Auto it could be absolutely flat growth on a month-on-month basis. And lastly, from the tractor division, the rural sentiment is actually boding up well. From Escorts as well as M&M tractors, we are expecting a double-digit growth on a month-on-month basis. So these are the trends that are shaping up when it comes to the June auto sales data. All eyes on that.
Okay, Shrishti, thanks for taking us through that. So, well, yes, come tomorrow, we will have auto sales numbers for the month of June trickling in, and as Shrishti mentioned, all eyes will be on that. But let's move on and talk about some macro indicators back home. In India's IIP growth for May is expected to slow to around 2%, with estimates ranging from 1.5% to 2.5%. The dip comes amid a sharp core sector slowdown to a 9-month low, dragged by a plunge in electricity output. However, strong momentum in cement and steel is likely to cushion the fall. Tell us more, Varun, on what we can expect when it comes to the overall IIP data later today.
Well, so the IIP numbers are expected to come at 9 months low, and the average is actually 2.4%, that is Nirmal Bank's average, and also ICRA is expecting the IIP number to come at in the range of 1.5 to 2.5%. Now, if you look, the overall IIP would be supported by manufacturing, although the low IIP numbers, that is the 9-month low, actually reflects the marginal slowdown in the core sector growth and also slightly higher base. Now, the core sector number that has come at around 0.7%, which was at 9 months low, and the slowdown was basically because of the electricity production, which was down around 5.8% on a YOY basis. Now, the electricity production was basically down because of excess rain that was there in the later half of 2002, May 2025, and because of this, the electricity generation in that month were actually low, which actually pulled down the overall growth in the core output. Also, if you look at the coal production numbers, they were slowed to around 2.5% on a YOY basis in the month of May versus 3.5% that was there in the month of April 2025. No doubt the construction related sector, they did well in the month of May, but if you look at the overall coal sector growth, that was at 9 months low, and that's the reason you can see the overall IIP numbers coming at a 9-month low of around 2.4%, that is Nirmal Bank's estimate, and also ICRA actually has a bigger range of 1.5 to 2.5%. So keep an eye on this.
All right, moving on then and focusing on Karnataka Bank, that's down more than 5.5% on the back of big leadership churn. MD and CEO Sri Krishnan Sharma quits, followed by ED Shekhar Rao. Meanwhile, Raghavendra Bhatt steps down as the COO. Now, the exits come amid board management friction after auditors flagged 1.5 crores in expenses without board's nod. My colleague Ankur Mishra is joining us to give us more color on that story. Over to you, Ankur.
Yes, in a surprising turn of events, top leadership of Karnataka Bank has resigned. MD and CEO Harsh Sharma resigned effective from July 15, and similarly Executive Director Shekhar Rao has also tendered resignation effective July 31. The bank has already made appointment of new Chief Operating Officer, and Raghavendra Srinivas Bhatt, who is a new Chief Operating Officer, his joining will be effective from 2nd of July. But for all these appointments, there will be regulatory approval which will be initiated, and bank has already formed a committee to look for a new MD and CEO. But what has been the matter so far? There has been some differences as per sources between board as well as management. Remember, auditors had flagged expense of 1.53 crore made without any board approval. However, the other side, the MD and CEO had earlier made a statement that this is too negligible amount to look after. But we understand that expense incurred in consultancy and capital outlay, and it was recoverable as per the management. However, auditor issued emphasis of matter in FY25 accounts. But now in the latest statement which has been released by the bank, Karnataka Bank clearly says that the matter is resolved amicably. So therefore, no such kind of differences remain as per the claim which has been made by the bank. But for now, the top leadership has quit Karnataka Bank.
Okay, Ankur, thanks for bringing us all of those details. That stock nosediving in today's trade, a cut of about 5% on Karnataka Bank. But on that note, we'll wrap it up on this edition of Market Fatafat. Stay tuned to the channel because closing trades is up next.